The policy priority in China has been to take advantage of this period of strong recovery and address some broader structural issues. That includes both things like financial risks and perceived property sector risks, but also broader societal issues like income distribution and concerns around tech sector regulation, which of course have been a big theme in markets in recent weeks. But that window of strong year-over-year growth for policymakers to really focus on longer-term issues, that window was closing. The economy has been growing month over month at a much slower pace, and we think Q3 is likely to look quite soft as well, given the recent COVID outbreak. So policymakers are going to need to shift into a more supportive mode. You alluded to kind of a bunch of battles, or it's a cocktail of negative factors right now. It's the past policy tightening. The fiscal deficit, the official fiscal deficit, has actually been at more or less zero in the first half of the year, which is highly unusual. You're not seeing that in other economies, and that reflects the relative lack of support or low support for growth right now. You also have had various sector-level regulatory initiatives, which I mentioned, including property and others. And you've had the recent COVID outbreak, typhoon and flooding in July. So a lot of challenges that have hit growth and are going to weigh on growth in the third quarter. And as a result, policymakers are going to need to move into a more supportive mode, particularly as we get into Q4. We could see a number like 4.5% year-over-year growth in Q4 if we don't see more policy support in the relatively near future. So we expect to see credit growth pick up somewhat, and also the fiscal deficit ease pretty materially here in the back half of the year.